Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to talk about how I use UPS for a poor man's cover call. And we're going to take those profits and buy a dividend paying stock, knocking down passive income using the covered call strategy. And we're going to use the poor man's covered call strategy. And when we have profits, we're going to buy a dividend paying stock, creating true passive income. It is my cash printing machine. So let's go ahead and get to this. If you like anything you hear today, I need you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. What I'm doing is this. It's a Friday night, and I put on this UPS trade a couple days ago. UPS had been hammered. I'm going to show you on the charts how it has absolutely been brutalized. But we use that as an opportunity to buy a Leaps call option so we can write a near-term covered call. And that money will be used to buy a monthly dividend-paying stock that I'm going to show you here at the end of the video. So I want you to stick around. I want you to go from thinking about the trade to thinking about wealth. See, we can be traders all day long. We make a trade, win, lose. But at the end of the day, many months or years from now, what do we have to show for it? Hopefully we have a stack of money, but what we really like to have are dividend-paying stocks, paying us monthly passively, not needing to do anything, just putting money into our account, going on vacation and spending, having fun, living the good life, and then when you get back, all of those bills can be paid with dividend-paying stocks. That's what we do. We think about being wealthy. It's a wealth mindset. We're not just looking for the trade. Now, with that said, we're going to talk about this UPS trade because we went ahead and used UPS, who absolutely got rocked after earnings, but we took advantage of that. We were able to buy low. And then we sold a call against those Leaps call options, for which I'm going to show you real quick. And that money will be used to buy a dividend-paying stock. Let's go ahead and take a look at that trade and what we did. So for a lot of you that might not know what writing a covered call is, it's real simple. You buy at least 100 shares of an optionable stock, and then you give somebody the right but not the obligation to take those shares from you at a price you pick for a time frame you pick, and they pay you a per share premium. And then you wait. You wait until it comes to expiration. And if the stock goes above your strike price, they'll take your shares. If it doesn't, you'll keep your shares, you'll keep the premium, and you'll move on. You'll probably do another trade. It's really that simple. It's as if you're renting somebody your stocks for 30 days, and they have an option to buy them from you at a price you pick at the end of that 30 days. It's really that simple. Now, what we're going to do here is we're going to mix it up. We're going to use the poor man's cover call where we simulate stock ownership. See, if I were to go out and buy 100 shares of UPS, it's going to cost me $14,300 because the stock was trading at $143 when I placed this trade. Well, that's going to cost me a lot of money, a lot of capital to buy 100 shares. And if I was going to do 1,000 shares like I ended up doing on this trade, I'm going to have $143,000. Well, I don't want to do that. So instead, I'm going to simulate stock ownership. So what I'm going to do is I'm going to go out to the greater stock market and buy the right from somebody to buy their shares. I'm going to pick a strike price that I'm willing to buy this person's shares, and then I'm going to pay a per share premium. Now, in this case, I'm going to show you that that option, that price that I pay, has what they call real money and time value in it. The person that is allowing me to buy their shares at $135, they have to be paid, right? Well, that's what I'm going to explain right now. So I hope you understand what we're talking about. I'm not going out and buying 100 physical shares. I don't own the shares. What I've done is I've gone out and I've bought the right to buy somebody's shares by May 17th. So somebody out there in the greater stock market said, I'd like to sell my shares at $135 and I'd like to get $10.60 for that. Meaning they pay me $10.68 for me to give them the right to buy my shares at $135. So that's what somebody did. And it's out there in the greater stock market. Well, here's John. John wants to own UPS shares, but he doesn't want to buy them. So he goes out and he buys the $135 Leaps call option. I have the right, but not the obligation, to buy somebody's shares at $135. And I paid them $10.67 for that right. I own this paper allowing me to buy his shares at 135. So that's simulating stock ownership. Right now, my brokerage will say, John, you can write a covered call against that because you have the right to buy somebody's shares at 135. So we can now place a trade. Now with the paper in hand to buy somebody's shares at 135, I can write a covered call. And that's actually what I did. I went ahead when the stock was trading at 143, sold the right for somebody to take my shares at 148. And they paid me 75 cents for that. Now let's step back for a second. I went ahead and bought the right to buy somebody's shares at 135. I paid for that. Now I sold the right for somebody to buy my shares, which I don't have, at 148. And they paid me a per share premium. So we're using options here and not the shares. Now there is one person who owns the shares. It's the guy who sold me the right to buy them at 135. Ultimately, if I have to give somebody my shares at the 148 strike, there's some things we're going to do, some things we can do. But that's the setup for this trade. Let's go ahead and take a look at the UPS chart, and then I'll come back and show you how this trade plays out and how much money I could potentially make. Hey, look, if you want to get a free 1-month membership, in the description below is an opportunity for you to download my brand new Poor Man's Covered Call Tracker that'll help you track all of these numbers. All you have to do is click that link in the description below, and you'll get both the brand new tracker with all the calculators, and you'll get a 1 free month offer to my membership. Now, if you don't want to mess with all that, you can go straight to my website, cptdashboard.com, click Upgraded Dashboard, and get a 1 free month offer. I send the members everything you're about to see. Get your 1 free month. Now, you're saying to yourself, this is too good to be true, because you're going to leverage 1,000 shares, yet you didn't pay $143,000. And I didn't. You're going to find I only leveraged about $12,000. Well, here's the deal. Before we get there, take a look at this. UPS absolutely gets slaughtered after earnings, and of course, the stock falls. It falls to support, which is pretty good. I did a poor man's cover call on UPS late last year, and it did not go well. I thought at 170 UPS would not fall much further. Well, they had the union contract, and it fell, and it kept falling. I wrote a lot of covered calls on UPS, just was never able to get off the mat, as by the time my expiration of January hit, well, my Leaps call option was not the value for which I paid. So I lost some money. Well, hey, look, I get kicked off the horse. If there's an opportunity, we jump back on the horse. And that's what we're doing here with these Leaps call options I just purchased on UPS. So UPS fell to about 143, and I decided we're going to get involved because look at that fall. I believe with it testing this support back here and it testing this support here, we should be able to get a bounce and it to move sideways to higher, and you could see that's exactly what it's doing, at least in the short term. So that sets up for a nice buy low, and hopefully we have our shares taken away higher. Let's go take a look at those numbers and see how much money I could make on this trade. But what I'll tell you is, right off the bat, the premium somebody's going to pay me to buy my shares at 148 is $750. And that is unbelievable cash on cash percentage gain money, because I only ponied up $12,000 to leverage 1,000 shares. Let's take a look at those numbers right now. Now, I don't want to lose you here if you're on the fence and you don't quite understand the strategy yet. But let's look at what I invested and how much money I can make. See, instead of buying the shares at 143 or $140,000 for 1,000 shares, I bought the right so I can buy somebody's shares by May 2024 for $135. I paid $10.67 for that right per share. So that means if I can get out of a trade, clean deal, making money, I'll never own the shares. And all I will have invested would have been around $10,600. I thought I invested $12,000, but that was on a 3M trade I just did the other day, doing the same thing. 3M actually had a horrible earnings as well. That trade's working out. Here's the deal. Investing $10,670, I'm able to leverage 1,000 shares of UPS. Now, I know some of you are saying, oh my gosh, he's using leverage. This is not going to end well. Remember, all I'm doing is buying the right but not the obligation to buy somebody's shares at 135. Come May 17th, 2024, I either sell my Leaps call option, win or lose, or I buy the guy's shares at 135. Okay, this is not scary stuff once you learn it. Now, with that said, you have to have a cast iron stomach because these options will fall and will rise big chunks because of the deltas. See, this is where I might lose you, but try to hang with me. Every call option has a delta attached to it. And what that delta means is, based on the strike price, and remember, this is the 135 strike, this strike price, 135, has a delta of 73. Now, what that means is this. As the stock moves $1 higher, this Leaps call option that I paid $10.67 for, it will move 73 cents of that $1 move. So if the stock moves $1, my Leaps call option will move up in value 73 cents. Now, when you think about this, cash on cash, that is a big move for the cost. I only paid $10.67, so 73 cents on $10.67, that's a healthy move. You have to understand the delta, because when the stock goes up or down, it moves based on its delta. So here are the numbers. Right off the bat, I'm going to get paid $750 straight up because it's 10 contracts or 1,000 shares. That is times 75 cents per share or 750 bucks. That's in the wallet. And oh, by the way, this is a 16-day trade because I picked the February 16th expiration. This person who is going to buy the right from me to buy my shares at 148, they're paying me 75 cents to buy my shares at 148. They only have until February 16th. Now, here's the deal. If the stock moves higher and this person, whoever the person is, wants to buy my shares at 148, well, guess what? When you consider where the stock's trading now at 143 and the stock moves to 148 and they take my shares, well, as the stock moves some 5 points, my Leaps call option moves 73% of that move. So let's take a look at the numbers. Now, I know my screen looks very busy here, so I'm going to highlight some things so you can stay on board. By the way, my members get all of this, and they get this constantly. I do poor man's cover calls throughout the year, and they absolutely understand the risks and the rewards, and I break down every trade pretty much like this. So what are we looking at on this page right here? Focus. What we're looking at is this. As I got involved with the trade, the stock is trading for 143x. My Leaps call option, I paid $10.67. If you put in the strike price of 148, that means the stock will move $5. Well, my Leaps call option that I purchased to support this trade, it will move $3.62. And what that means is, hypothetically, when we get to the end of the trade, February 16th, if everything magically aligns and the stock's trading at 148, here's the deal. My Leaps call option will be worth $14.29. And my covered call option that I got paid 75 cents, all of this time value will come out of the option. And it'll be trading basically for real money. And if it's trading under 148, this option that I got paid 75 cents for, it'll be trading for basically a penny because it's not at 148 or above. Now, if it's trading above 148, then that means the intrinsic value part of the option starts to kick in. So imagine the stock trading right near 148 and it pokes its head above. Well, on the day of expiration, when it's below the strike price, that option's going to be worth basically time value. There's no real money in the option. It's not above 148. So let's hypothetically say it's 1 penny. At the end of the day, it pokes its head above 5 cents higher. Well, guess what? My option is going to be worth 5 cents higher plus about 1 penny in time value, or about 6 cents. So this is how this trade would go if it ends perfectly at 148. And by the way, that's hypothetically because chances are it won't, but let's just role play. My Leaps call option will be worth $14.29. I will buy back this option for which I got paid 75 cents. I will buy it back for a mere penny. So I make 74 cents. But my Leaps call option will be worth $14.39. And when we sell the Leaps call option and we keep the majority of the covered call premium, this trade turns out to be a whopping 41% in 16 days, making some $4,372 on $10,670 invested. For the most part, this is how it'll end. I'm not going to go in much deeper here. If you're a member, you would get the more advanced version of this, where what happens if the stock rockets past 148 and my 73 Delta does not support a 1-for-1 move in the stock. That could be where I lose money. And that's where a lot of people on YouTube don't talk to you about that part of the poor man's cover call trade. But I will. That's why you want to become a member. I give you a 1 free month offer. In the description, get your 1 free month. Finishing up the UPS trade, we have till February 16th. And the deal is this. I'm at least going to make $750 on the front side of this because I sold this covered call, collected 75 cents a share. If the stock moves higher, my Leaps call option will move higher as well. That is a very favorable outcome because then I would be able to sell this Leaps call option or use it for another covered call. Because remember, I have the right, but not the obligation, to take this person's shares at 135 by May 2024. So I may use this for the next 5 months generating these kind of returns. And here's the hook. I need the stock to trade in and around 143 because once the stock starts to dip below 143, my Leaps call option moves 73% of that move, and I could be stuck like I was late last year. But if I'm right, and I believe UPS has hit a nice support line and will move higher from that, well then this should be a beautiful outcome, not using that much money. Now let's talk about that monthly dividend stock I'm going to buy with all this money, and I know you're going to like this one. Now here's an example of the email I sent to the members. This yen trade closed, and I made $435. You could see it right there. So what I've decided to do is take this $435 and I'm going to buy equivalent number of shares in PYPY, which is one of my favorite Yield Max ETFs for which it pays a monthly dividend. And that's exactly what I did here. I went ahead with $430, busted out the calculator, divided that out to 23 shares, and we went ahead and bought that. Now we've been collecting PYPY, and what we're going to do is this. We want to collect about 1,500 shares of PYPY so we can be knocking down that passive income. Every single month, PYPY will send us a monthly dividend and we don't have to touch it. Absolutely passive income. Now, the Yield Max ETFs are not for the faint of heart. This is an ETF company that will use stocks and simulate stock ownership and sell calls and puts. And I'll tell you what, they don't own the shares. And you get all the volatility of options. I want you to go to Yield Max. I want you to do your due diligence. Right here I'm using PYPY. I've used Coinbase's version, which is called Coney. I've used Tesla's version, which is called Tesla. They have Microsoft, JP Morgan, Exxon. They have PayPal. They have Square, AMD. This is the new era of ETFs paying monthly fat dividends. And when I say fat dividends, if you're a closed-end fund investor or a mutual fund investor where you'll collect 5, 6, 7 cents a share and you love it because you have lots of shares, the new era of option-based ETFs that are paying monthly dividends, they're paying 30, 40, 50 cents. Coney paid $2.20 last month. And I'll tell you what, PYPY is probably going to pay about 60 cents this month. That's per share per month. Build yourself that little nest egg. Take your covered call profits, buy dividend-paying stocks. So what you have is a semi-passive income strategy. Then you have a passive income strategy when you collect those fat dividends. You go on vacation, you can come home, pay the bills, and feel like you're living the good life. Hey, look, if you have any questions, man, post them in the comments. The poor man's covered call is not for the faint of heart. You got to know what you're doing. Yield Max ETFs are not for the faint of heart. Got to know what you're getting involved in because they move as much as stocks do. So with that said, I hope this video helped you out. And by the way, this is the trade write-up that the members got. I told them all about yin and how I bought back this covered call option, told them what it was worth, how much I made, how much I've been making, and then I even told them that I went ahead and took those profits and bought 22 shares of PYPY. See, they got this trade, then they get the close trade. I sent them a trade alert today on a 5-day TNA in the money covered call, which pays about 1.9%. Turned out I did the trade, knocking down some $1,200 in about 5 days. And I'm going to take that profit, I'm going to buy another ETF, and they're going to know which one I buy. Hey, look, cptdashboard.com, click Upgraded Dashboard, get your 1 free month, or in the description below, you get a free month offer. All you have to do is get your brand new Poor Man's Covered Call for 2024 with all the calculators and everything you need to keep your Poor Man Covered Call trade numbers in front of you. Hey, look, I would love to welcome you aboard. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.